this is definitely one of the more unprecedented moves that any country has attempted ever. And although we are still uncertain about what the actual impact of the measures might have been, it is undoubtedly true that the budget will be required as a big stimulus to offset the impacts. Every budget is important, but this one, and particularly in the context of the increased uncertainty in the global environment, plus together with the domestic impact, this will be a very, very important budget. Every budget that the previous government, and particularly this government, has come up with has tried to rectify some of the previous mistakes and introduce more policy uncertainty into the policy frameworks. So I think this one, and particularly after the demonetization, the surprise that came in with the extinguishing of some currencies, I think this budget needs to reassure domestic and global investors that the government is committed to a lot of certainty, particularly in matters of tax. Then the second point would be to consider a stimulus, and a stimulus with there are always, remember, there are trade-offs between the extent of stimulus that the budget can provide together with the extent of debt that gets built up, because remember that India is also looking for an improvement in its sovereign credit rating. So there's always that trade-off that needs to be looked at. But at this point in time, our sense is that with global slowdown, potential for global slowdown, and a domestic hit, I think the budget should veer a little bit more towards stimulus spending rather than looking at fiscal consolidation and conservatism. The third, as an offshoot of the last two, is a rationalization of the tax regime. Of course, I mean, one major tax change is on the way with the introduction of the goods and services tax. But together with this, I think there should be an attempt to rationalize both the direct and indirect tax rates. The government is already talking about this. We have already started working on this in the previous two budgets. But I think, for one, personal income taxes need to be liberalized a little bit to put some additional money into households' pockets, and more specifically, in terms of the corporate income tax, I think there should be a rationalization together with the reduction in rates. Well, the fiscal deficit, we still await the results, the report of the FRBM, the new FRBM committee. As we discussed previously, there is always a trade-off between the extent of use of the fiscal levers. That means increasing the fiscal deficit to spend more beyond and above the revenues that the government earns, as well as some degree of conservatism in terms of maintaining the credit stability of the sovereign credit rating. Remember that we expect that there will anyway be an increase in revenues, both tax revenues and non-tax revenues, from the amounts of money that we await the final results that might come into the system, and the potential to tax some part of the system. But over and beyond that, there might be an increase in the buffers, the counter-cyclical buffers. So instead of moving from a 3.5% deficit the last year down to about 3 or 3.2, there might be a case for keeping the budget deficit, the fiscal deficit, at 3.5%, but probably not too much beyond that, because beyond that there would be some concern from global investors regarding the stability of the fisc. In terms of reforms, the budget, remember, is a big bully pulpit for the government. I mean, it's not just a matter of using the fiscal levers, the tax and the expenditure levers. The first reform that we are looking at is using the budget to provide a cushion to states to incentivize them to come onto the GST board. So that's number one. In other terms, I think a higher disinvestment target, and disinvestment not just by selling some parts of existing companies. We are already beginning to hear of strategic sales of some companies now. I think the government should now move into a more aggressive strategic sales, of some of the companies that it owns, fairly valuable companies, which will provide them an enormous amount of headwind to provide a lot more stimulus, either through consumption or through investment, through higher capex from public sector. I think that's a very large part. And thirdly, and this is not strictly part of the budget, I think the government should again review the risk sharing mechanisms in the public private partnership to enable the public sector to come back into the segment. Lastly, how to deal with the stock of stressed assets of the state owned banks, the public sector banks, and how to use the budget to leverage more funds either through asset reconstruction companies into these companies, I think will be a very important step that we will watch.